Hello, folks. It is Thursday, August 8th. It's almost 7 o'clock in the evening on the west coast of the United States. Let me share my screen here. We'll get started. In this video, we'll be looking at just these few charts here. I'm going to stick with the daily time frame. Want to keep this video short. A lot going on in the financial markets these days. And, I'd be lying to you if I pretended that I understood what was going on. I don't. So, and anybody who tells you that they know what's happening in financial markets, they're kidding themselves or they are kidding you or both. And so, anyway, with that said, I feel like I'm pretty good at technical analysis, drawing on charts, had some good training in that realm. And so anyway, I'm going to share with you what I feel like has value. And that's my technical analysis of the charts. Sometimes I might say something intelligent in my random babblings, but anyway, this is the S&P 500 in the daily time frame. So a lot of action in the equity markets. This red bar, that was Thursday, and obviously that was a significant failure on Thursday, dropped below the 50-day moving average, and then gapped down, significant gap down on the open Friday. That's this bar, this candle here. And then another big, even bigger gap down on the open Monday morning. And so, there's two big gaps there, and that's the runaway gaps. That's that comment. Um, Runaway gaps, that's impulsive price movement. And in this case, obviously, that price movement is to the downside. And so, those runaway gaps, in my opinion, are significant. And then what I believe is even more interesting, more significant in this chart is that so far, all the markets have done, all of the major indices anyway, all they have done so far, Tuesday, Wednesday, Thursday, is retest Friday's failure. So, there's Thursday, there's Friday, and then that's the failure. So this level, that's the failure level from Friday. And notice that all price is doing right now is retesting that level. It was unable to push above that level today. We'll see what happens tomorrow with the geopolitical activity that's going on, just in the last hour. Um, are traders going to hold stocks over this particular weekend? Yeah, we'll see. So anyway, I guess based on that, I'm not expecting a strong day tomorrow, but I could certainly be surprised. And anything can happen these days. And like I said, I don't know what drives these markets, certainly at this point. Um, let's talk about potential downside targets, because again, in my opinion, I don't believe by any means that this downward movement is over. So the 200-day moving average, that's an obvious target. That's always a good level for a market to pull back to when it is seeking support. And so that's an obvious target. We got a little bit of a horizontal support level in there. And coincidentally, this is the 5,000 round number. And of course, round numbers often serve as price targets. Um, it's a human psychology thing. It's just people like round numbers. And so anyway, 5,000 is a potential. And notice that 5,000 level is almost coincident with the 200-day moving average. And so anyway, in my opinion, that's a strong downside target. And then another technique, and this is an advanced technique that Dr. Timothy Morge taught in his advanced class on Andrews pitchforks. It's called double the range. Double the range. And so when you see a vehicle trading within a well-defined price range channel, And in my opinion, that's clearly what's going on here. This is a channel. There's the start of the channel, that price gap right there. There's the bottom of the channel, that support. And then we can see the top there. And so, you know, top of the channel, bottom of the channel that's a simple trend line. And so that's the range of that channel. Now we double that, we double this line and drag it down from the bottom of the channel to find the next likely or potential target. Because what Timothy Morge taught was that when price breaks out of a channel, either direction, breaks up, breaks down, the next likely target is double the range. And so that's what we have here in this dotted blue line. That's double this price range. And notice again that it's coincident with the 200-day moving average. And so in my opinion, we have multiple price attractors drawing price down towards this level. MACD in bear mode, but very oversold. I mean, you know, we're going back, this is all the way back into 2023 to get to this level of oversoldness based on MACD. And of course, you know, MACD can go as far as it wants in either direction. It's not a bounded indicator. But quite often price reverses at the level of previous MACD highs and lows. And that's why I pay attention to this. That's obviously, that was way oversold back in 2022. Yeah, all of that was in 2022. So anyway, there's the S&P 500 daily time frame. Dow, very similar price action. I mean, you know, there's the Thursday fail, Friday fail, Monday fail. And again, all we're doing at this point is testing the failure level from Friday. That's all that's happened Tuesday, Wednesday, Thursday. It's a retest of the failure level from Friday. Again, 200-day moving average. We've got some minor horizontal support levels here. This Andrews pitchfork, it's actually a shift fork. It's describing the price action pretty well. A little bit sloppy along this upper median line, but the rest of the action looks pretty good, which suggests that this pitchfork could be acting as support currently at this lower median line. And so anyway, excuse me, that's a potential target. Here in the Dow, we do, you know, something like that. Hit reset. Sorry about that, folks. So potential target there, 200-day moving average as a potential price target. Let me get rid of that fork. That's just cluttering up the chart there. Oh, and I don't have, sometime when I'm focused on other stuff, I take, I turn the indicators off. And now I just got them twice. So anyway, MACD, we got the signal line down in bear mode. Other line is still in bull mode. So can't say much about MACD. Fairly oversold relative to the last few months of action. And I don't give a lot of credence to the Dow. It's 30 stocks. It's 30 stocks. Who cares? Of the three indices, the Dow is the easiest index to manipulate because it's only 30 stocks. Weighted, rotate stocks in, rotate stocks out. I mean, the Dow is really a joke. It's kind of funny that that's the main index that Americans watch, but really, anyway. NASDAQ tech index in the daily time frame. again, runaway gaps, Thursday, Friday, Monday, ugly, ugly action. And all we're doing so far is retesting Friday's failure. So it's the same price action in all three of the major indices, and that price action is ugly. It is impulsive price action to the downside. So if you're bullish on stocks, just, put your spidey senses on, pay attention. Don't be lackadaisical about watching your stock portfolio at this juncture. Downside targets, 200-day moving average again. What do we got here? Yeah, verticals or horizontal support down at that level. That's below, that would be below the 200-day moving average, but that's a potential price target. And again, geopolitical stuff going on within the last hour or so doesn't look good. Could well affect the financial markets tomorrow. So it'll be interesting to see what happens in markets tomorrow, because it's likely there will be significant amount of traders who aren't going to stay long for the weekend. They're going to get the heck out and wait and see where we're at Monday. But that, again, what the heck do I know? This is just Brian babbling. MACD in bear mode, but very oversold. I mean, again, we've already pushed below this level of being oversold in MACD, and clearly pushing below that. So we'd have to go back. We're all the way back into 2022 to find a level in MACD that is more oversold than the current level. So anyway, oversold. Not surprised that we're getting a bounce. If I was a betting man, I wouldn't be betting on this price bounce to continue, and would probably put a tiny bet on markets rolling over tomorrow, because people just not going to hold over the weekend. But again, what the heck do I know? I'm looking at this chart because of the AI bubble, which in my opinion popped about 2 weeks ago. Investors and traders were just drinking their own Kool-Aid about AI saving the world. AI is going to save the world. And because AI is going to save the world, we're going to need all these data centers. And because we're going to have all these data centers, we're going to have to generate all this electricity to feed and just on and on and on, all this hype about AI and what it's going to do for the world. AI is not going to save the world, in my opinion. And so anyway, I suspect that that's part of what is happening now, is that the AI bubble popped 2 weeks ago, and investors, traders are adjusting to that reality, or acceptance of that reality. So anyway, the semiconductor index is one of the ways of looking at the AI bubble. And so what we can see here, or what I see here, is similar kind of action. We get the big fail on Thursday. When was that? Yeah, Friday. We get the big fail on Thursday, a small fail on Friday, but then on Monday, these stocks got a bid. And so the semiconductors on Monday, there was some strength. My opinion, my guess is that this was buy the dip. There's some subset of the AI bubble people that buy the F and dip. And that's what they did on Monday, which is why we got a green bar there. Well, actually, we got green bars on well, we didn't, no green bar there. and no green bar there. And so anyway, tech stocks stronger on Monday than the overall markets. And then we're seeing that as well here in the semiconductors. They were stronger than the overall markets. But again, I suspect that's dip buying. Gold couldn't have a video without at least glancing at the gold charts. Gold's looking fine, folks. What do they say? Jump in, the water's fine. And I tell you, as the markets were, the equity markets were melting down, other than it being interesting as something to watch, don't care. I don't have any money in the equity markets. All of my money is in precious metals. So I slept easy the last week, not worrying about equity market meltdown. So anyway, that's just me babbling. So anyway, gold just doing a high consolidation up here in the 23 to 24.50 range. In my opinion, this is a sideways consolidation that is allowing gold to gather energy for its next move. Now, there's no guarantees in the financial markets, but in my estimation, my guesstimation, the next move in gold is to the upside, and it's likely to be dramatic. That would be my opinion. MACD in bull mode, it's not overbought. So based on MACD, gold's got lots of room to move to the upside if it wants to. Energy just above mid-range. So, it's got the energy to do it. It's kind of overbought based on price. Excuse me. Notice the big gap between the 50-day and the 200-day moving averages. And, the price doesn't like to get overextended from the 200-day moving average. And so that's part of why we get sideways consolidations. When a vehicle, in this case gold, is strong, instead of getting a pullback to the 200-day moving average, it's doing a sideways consolidation, allowing the 200-day moving average to catch up to the price action. So anyway, this, in my opinion, I would say is a sign of strength. Gold is doing just fine. Don't sweat gold. Silver, so I think silver was put on the planet to frustrate traders. Anyway, nice day today in silver. Support on the 200-day moving average. Horizontal support from this previous low back in May. What can you say about silver? Bear mode in MACD, on a sell signal, energy very low. So silver ain't looking good, but silver is going to follow gold with some lead or lag. Sometimes silver leads gold, sometimes it lags gold. But, when gold moves higher, silver is going to move higher. Bitcoin, this was, I'm not a crypto fan. I don't own any crypto. But this chart is interesting, and obviously there was a big, I think that was down 14.58%. That was Monday. Obviously big drop Friday, ugly action on Monday, but found support. 200-day moving average, this horizontal support zone. And so bouncing from that level, and of course, support median line, the lower median line of the shift pitchfork. And then a nice strong bar today, that was 8.5%. So big gain today, a little bit of a gap higher on the evening session. But tapped the 20-day moving average and then pulled back. 20-day moving average and the median line of this shift forward. MACD in bear mode, energy rising, currently about halfway up. What else have we got? That's really all I'm going to share in this video. Again, I wanted to keep it short. There's stuff happening in the world that could well affect financial markets tomorrow. So wherever you get your news, I suggest you give it a glance tonight. Certainly check it in the morning. And I look forward to talking to you soon, folks. Let me end this video here.